Welcome to Cam Financial Solutions, where we empower you to keep more of your hard-earned dollars. You might be wondering what's in the new tax bill and how it affects you. Let's take a look at some of the most significant provisions for individuals. We will review the provisions for businesses in a future video. Individual tax provisions. Individual tax rates. The bill made both the individual income tax rate cuts and the thresholds under the 2017 tax cuts permanent. Standard deductions. Single goes from $14,600 to $15,700, an increase of $1,100. Married filing jointly goes from $29,200 to $31,500, an increase of $2,300. Head of household goes from $21,900 to $23,625, an increase of $1,725. SALT, state and local tax deduction. The SALT deduction cap goes from $10,000 to $40,000. However, it is not permanent. It is only for 5 years. This will mostly help taxpayers who live in states with high state, sales, and property taxes. Tax relief for seniors. The bill includes a $6,000 deduction for older adults, 65 and older, with incomes below $75,000 for single filers and $150,000 for couples. CTC, Child Tax Credit. The new tax bill increases the child tax credit by $200, from $2,000 to $2,200. Deductions for overtime. Taxpayers can deduct income earned on overtime up to specific amounts. For single filers, there will be no taxes on the first $12,500 of the overtime income and $25,000 for married filing jointly. These amounts will phase out at certain income thresholds. For single filers, it phases out at $150,000 and $300,000 for couples filing jointly. Tip deductions. Taxpayers can deduct income earned on tips up to $25,000. These amounts will phase out at $150,000 if you are single and $300,000 for couples. Only qualified tips will be deductible. Qualified tips are tips received in occupations such as hospitality, personal care, transportation, and other occupations where tips are customary. Specialized trades or businesses such as dentists, doctors, attorneys, accountants, and others are not qualified for this deduction as they receive compensation based on actual services they provide. Auto loan interest deductions. Taxpayers can now deduct up to $10,000 on interest paid on loans for buying new American-made cars that are finally assembled in the United States. This provision expires at the end of 2028. There is an income limit on this deduction. Single filers, $100,000. Couples, $200,000. Let's now look at some examples based on the single and married filing statuses of how the tax cuts impact you. Example number 1. Single filer, $40,000 total income. Michelle is single and uses the standard deductions with a total income of $40,000. When she filed her 2024 tax return earlier this year, her federal income tax liability was $2,947. Under the new tax bill, if Michelle's income remains the same for 2025, her tax liability for 2025 will be $2,809, a savings of $138 or 4.68%. Example number 2. Single filer, $100,000 total income. Jane is single and uses the itemized deductions with a total income of $100,000. Jane's itemized deductions, sales, property taxes, and $8,000 in mortgage interest was $20,000 in 2024. When she filed her 2024 tax return earlier this year, her federal income tax liability was $13,693. Under the new tax bill, if Jane's income and itemized deductions remain the same for 2025, her tax liability for 2025 will be $12,773, a savings of $920 or 6.7%. Example number 3. Single filer, $250,000 total income. Sam is single and uses the itemized deductions with a total income of $250,000. Sam's itemized deductions in 2024 was $42,000, $20,000 in sales and property taxes, and $22,000 in mortgage interest. When he filed his 2024 tax return earlier this year, his federal income tax liability was $49,595. Under the new tax bill, if Sam's income and itemized deductions remain the same for 2025, his tax liability for 2025 will be $46.250, a savings of $3,345 or 7.44%. Married filer, $250,000 total income. John and Jennifer files married filing jointly and uses the itemized deductions with a total income of $250,000. Their itemized deductions are $42,000, $20,000 in sales and property taxes, and $22,000 in mortgage interest in 2024. When they filed their 2024 tax return earlier this year, their federal income tax liability was $39,673. Under the new tax bill, if their income and itemized deductions remain the same for 2025, their tax liability for 2025 will be $37,164, a savings of $2,509 or 6.32%. Did you notice the commonalities in the various examples we presented? If you said the new tax cuts benefited the wealthier taxpayers, you would be correct. If you found this video helpful, please click on the like button and subscribe to our channel. Want to minimize your tax liability? Visit our website at camfinancials.biz or send us an email at cm@camfinancials.biz for a free consultation. Remember, it is not what you make, it is what you keep.